Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Casper J, at Adequate Ryan, Cyril O, at Kruna, Andrew C, at Green Tard Cycle, and Thomas C. Back on SmithWeekly Discussions today is Dustin Garrow. Dustin is the founder and managing principal of Nuclear Fuel Associates, a consultancy suite on all things commercial nuclear power and its hunger for a good diet of uranium. Dustin has many decades of experience in the business, including sales of uranium concentrate to utilities globally in the billions of dollars range. You can learn more about Nuclear Fuel Associates via their website, nuclearfuelassociates.com. Mr. Garrow, what's new?
Well, first of all, appreciate being back on, Andrew. It's been a little while since we've had a formal discussion, but certainly, as you point out, I've been in the business for several decades, and I think we're seeing an interesting confluence of events. The interview that Tim Gitzel gave to CIBC a week or so ago, he said, 2021 was a real watershed for nuclear power and therefore for uranium. So I think we're entering one of those phases of the market where it's going to be pretty exciting for the next, maybe hopefully several years.
Well, let's dive right in here, Dustin. First off, what are you seeing and hearing from utilities, and what do you perceive as their sense of urgency to go out contracting for pounds?
One thing that kind of sets the stage is the Nuclear Energy Institute held their International Uranium Fuel Seminar in Savannah, Georgia in early November. And it was the first in-person, face-to-face industry meeting in, they said, 22 months. And, good turnout from certainly the US utilities. It tends to be more US focused. And I had one-on-one meetings, I think, with 6 or 7 of the biggest utility fuel managers. The program in Savannah was very uranium focused. There were presentations from Cameco, Kazatomprom, Sprott, Trade Tech, all the major players. And the utilities are really focusing now, I think, on covering off not just spot or, in the midterm market, which is go out maybe 2 or 3 years, but the true long-term market. And so what we've seen post Savannah was a couple of the biggest US nuclear utilities did enter the longer term market. In other words, one of them was looking for deliveries out beyond 2030. Now, there's not been any real feedback yet on what they saw, but I think this could be, the start of a much more active term contracting sector during 2022. It's, the utilities, like I said, are focused on it. What they heard was all, I think, was concerning to them. In other words, like Sprott, they got up and said they want to be the second most important customer to the producers after the utilities. And so they're talking about long-term purchase agreements for the physical trust. So I won't go into the details of all the presentations, but again, I think it was, the right time for everyone to get together. The focus now, the term contract volume, UX has reported was still under 100 million pounds in 2021. I think we'll see a noticeably higher volume contracted this year.
It'll be interesting to see what happens on that front. Again, looking for those notable volume years, which I think are certainly ahead of us here. This year seems that things will probably be slow. Not opposed to that. I know a lot of folks have screened bloody murder in the uranium sector recently with the equities, on average now, 40, 50+% down. But while things do bleed out and get a little bit slow in the meantime, it's great for accumulators and for folks that had cash on the sidelines, which if they're following SmithWeekly research, you should have had cash on the sidelines, and hence no big need to say much other than you do have broad market conditions that have also led to this. So I think it'll be an interesting year. And to be honest, it would be nice to see things chop for a while, to be honest. But things are lining up very, very well. Continue to tally up on the bullish side, not too many tally on the bear side. So we'll see what happens. How about reverse carry trade, Dustin, and just, overall carry trade actions that are out there? I'm of the opinion that it makes more sense to clear some of these reverse carry trades now rather than later in the cycle. But any comments on, the carry trade, reverse carry trade action that with the spread that we have here between spot and term, any numbers that you can provide as far as ballparks on what you see tied up in carry trades, and where do you see this going as term contracting starts to kick in?
Well, first of all, kind of again broadly on carry trade, I think as you're aware, and probably most of your audience, this is something that came up, and let's pick a date, maybe 5 years ago, and it was really driven by the significant difference in the spot and term prices and extremely low interest rates. I mean, at one point, one of the Japanese trading companies had negative interest rates they were able to harvest. And so, particularly in the U.S., I mean, I don't think carry trade's been that broadly, embraced outside the U.S. utility side. But they found it as a way to cover off kind of that 2, 3, and then eventually maybe 4-year forward period under very attractive prices. In other words, it was even with the interest attached, a little bit of a profit margin that the traders or that wanted to be involved in carry trade, you were still well below the new term contract price levels. So I think there were, I've never seen a number, but I think it's got to be in the maybe 15, 20 million pounds. Could be, wouldn't surprise me over a 4-year period going forward, and that would only be 10% of the utilities, U.S. utility requirements, if it was just averaged out. Could be more than that. But now I think what we've seen is one of the big topics has been, well, where's all the spot material coming from? Last year UX reported 99.4 million pounds of transactions. Now, half of that were the traders or intermediaries, but producers, utilities, fairly solid purchasing. And where did it come from? So it's been looked at recently. There was a pretty good paper put out on it by one of the investment firms. And what we're seeing is some of those carry trades being brought forward. And then that brings pounds that these guys probably purchased. They were holding an inventory, or they had commitments to buy that had flexibility. So they're bringing them from maybe 2 or 3 years out up into the current market. And so that's then providing materials, say, for spot purchases. So what I've found over the years is that the traders tend to be pretty savvy, and they'll look at that spread, and they'll look at interest rates and currency exchange rates and all kinds of things, and implement strategies that, let's say, the traditional producer utility market still finds a little confounding. How much more is left? We could see quite a bit more material move, into the current market. Is it 8 to 10 million pounds? Could be. I don't think it's, significantly more than that, but it adds to the availability in the near-term market. That's on top of producers selling. Rio Tinto said they sold 1.5 million pounds out of, what was remaining at Ranger, and BHP is reported to sell into the spot market. The Kazakhs obviously show up with spot material. So anyway, we can get to kind of that, several millions of pounds that are then being accumulated by the funds like Sprott, which have purchased, 25 million pounds since implementation of the trust. And I think they're now set up to buy maybe that much or more this year. So again, reverse carry trade, it's one of the several sources of material in the near-term market. And maybe by mid-year, we'll see it kind of begin to drop off. It just, it's one of these things that's really hard to forecast. And it's a decision by each of the individual companies that are involved in forward carry trade, how they deal with what is currently the price differential, which is kind of closed between spot and term. But I think the term price, we're going to see that start to move up pretty smartly over the next few months. So again, we'll have an interesting, differential between the markets. So kind of a long-winded response to just, one of what's proving to be a fairly significant source of spot material right now.
Dustin, I appreciate that. And I hope the audience listened in there and has a little bit more understanding of that. I know there's some good folks out there that have a very good handle on what's happening there behind the scenes. A lot of those folks don't talk out in the public, but nonetheless, appreciate you sharing a little bit of insights there on what's happening. And I think for some people that have big concern here with this, I think that they should just sit tight and take it easy. This is something that is not core to what needs to happen here. But anyway, nonetheless, let's move on. Let's rehash this U.S. domestic uranium reserve. The current administration seems to be more concerned about domestic social policy over just about everything else. Do you think anything comes of this uranium reserve effort by American, or call that by United States? What are your thoughts on the domestic situation here, and do you think anything of note really comes out?
Well, as you know, I'm always a little skeptical when the government gets involved in any of these areas of the industry, which they are pretty broadly, something we have to deal with. But yeah, the uranium reserve, it gets budgeted. It's less than people had hoped for. The Department of Energy, it would have been last May, or it was even before then, big conference call. We're going to be aggressive. We're going to get this moving. And then they come out with a questionnaire and how much have you got? This is to the supplier producers. The Secretary of Energy, or I think the director of the subgroup, says, well, it may take a year for us to get moving on this. So, it's one of these things that, will it happen? I'm kind of 50-50. Maybe I'm 60-40. I mean, why not? But it's going to be, the volume that they can purchase with the budget that's approved, shrinks from when this whole thing started and the price was below 30. Now we're in the low 40s. And the general consensus, we didn't really mention it, moving forward is even some of the industry analysts are saying, upward price pressure on uranium. Now it's going to be volatile, but the point being is the government program will end up, it probably will be, a minimal amount of material. And so I don't see it as, some kind of launching the industry forward. And, that to their credit, the producers told, I know, the government, we need multi-year contracts at sustainable prices in order to make decisions to then invest in restarts or new production facilities, and that's not part of the deal. So it's kind of a nice, I guess, adder if you've got material, particularly in inventory. Some of the U.S. guys do have U.S. produced pounds in inventory that they could sell to the government almost overnight, but it just won't. It won't be the government's here to help and we'll do these contracts to get some basic amount of U.S. production moving forward. I think the market will take care of that. In other words, as the price improves, more utilities come in the term market, and I think they may focus a bit. They'll make sure, some of them, that they give the U.S. Sourced material a good hard look, particularly with geopolitical events in Kazakhstan. So, and the uncertainties kind of over the Russian supply. So again, I think there will be market share available for U.S. producers at higher prices. And so the government program it won't matter one way or the other.
Yeah, certainly not in court, Dustin. And if we get to throw an extra sprinkle on the cupcake, we'll take that, but not required. Let's put it that way. And, it's
Yeah.
surprising too, though, some of the disregard and head in the sand with these things, which we'll get to Kazakhstan in a moment, but also things like Ukraine, for example, and the strategic nature of what's happening there and the leverage that Russia has. I don't care how you cut it. Putin is a brilliant tactician. And I hate to say it, he's more brilliant than our U.S. counterparts. Anyway, let's move on here on mergers and acquisitions. You're well informed in this area, but very important also at these current stages in my mind, and I think to a lot of good strategic folks out there in this sector, and also very important to many issuers. You're well aware of some of these quote strategic reviews coming out officially from folks like Forces and Toro and Vimy. Probably internally, some others are thinking the same thing, but nonetheless, what are your thoughts on M&A here? And also these formalized reviews?
Well, one thing, I've been in the production side for a pretty long time, and there's a sensitivity to, your annual production volume. Back in the 80s, early 90s, there were, guys in the U.S. producing 600,000 pounds a year, and you really can't make a go of it if you're at that level. So there's a sense that you've really got to produce, maybe 2 million pounds a year to 3 million pounds to have a decent impact, I guess, in the market on, the utilities then pay more attention to you as a long-term supplier. So there's a need for, the M&A side, let's say on the bit smaller companies, and plus it's availability of expertise, management, professional expertise in the industry. We still have a lot of companies that have not, quote, staffed up for good reason. We were in an extremely depressed price environment, but now as we move forward, there's more optimism, which I think everyone's aware of on the nuclear side. There's a need to, let's call it, agglomerate some of the companies to just have a bigger footprint. And so I think we're still seeing, discussions going on that front, and even bigger, when you've got some fairly large projects that may not fit in the portfolio of a much larger mining company. Are they potentially interested in vending some of those off? Or so, yeah, I think there's, and you mentioned the strategic reviews. Some of the smaller companies don't have the personnel or the expertise to really do a broad based review of what their options are. I think they get approached with offers, and they say, well, now with the market improving, maybe we need to look at, what are the company options that you can then present to the board and say, well, we've had this looked at. Here are 5 options, of which 3 make sense, whatever the outcome is. So I think obviously we're in that phase of the industry. And now we've had the equities go up, they've come down. The differentials, start to be a bit different. And so I just think it's an interesting area right now. And when we come out of the end of the tunnel, there will be not necessarily fewer companies, because there will always be those that are created by, a couple of geologists with some drill data, and, we're now in the uranium space. But I think, well, there's a need for, first of all, new production beyond the restarts, which I think everyone's aware of, is Langer Heinrich at Paladin, MacArthur River, Kalakira at Lotus, Honeymoon at Boss. But when you get into the second half of the decade, which isn't very far off, you do need new production capability. And so that's really the issue is, how many companies are going to be big enough, will have the staffing to move forward to build that 2.5, 3 million pound a year production facility, all of which will be driven by term contracts again, there's just not much going on right now. Even though there'd been the uplift in the equities, the price of uranium, as we know in September, went over $50 a pound for a couple of days. Didn't stay there, but then it dropped back. But it's certainly better than in the low 20s. So I think that's the M&A area is I think pretty active right now, with nothing being formalized. Obviously, as you're well aware, Encore did the deal with Azarga in the U.S., which shows that there's, I guess, deals to be done out in the M&A area. So yeah, it's kind of an exciting time for that, because when the price is depressed for an extended period and equities are in the, or let's say not overly encouraging, there just wasn't a lot going on. And now I think there is. So
I think there's a lot of people that have warmed up to this and understood that this is actually important, and that, the window of the very, very bottom of the barrel times have passed us, but there's still an open window that's closing on M&A, Dustin. And everybody's starting to warm up to the fact that there are some key issues that are out there on M&A, and that M&A is actually a very big importance. And I would just say that it sounds like some of these issuers need to employ the services of the good folks at Nuclear Fuel Associates for some M&A work. And then I would also add that the producers, or the wannabe producers, will become the consumer of their own balance sheet. And what that means is that you have to continue to add to that balance sheet and grow that balance sheet, which means M&A. And,
yep.
Okay, exploration, expansion, sure. But again, it's going to require basically all of the above. That's important. The other thing is too, is I think if you're a single asset, single jurisdiction company, you've got a problem. People are waking up to that as well. Single asset, single jurisdiction. That's only going to get you so far. And then on addition to that,
yeah, another quick comment on that, Andrew, is that also applies with the utilities signing long-term contracts. They are made more comfortable if you have a bit of a spread on your current or anticipated production sources. So that's just another, it's not a major driver, but it's just something that works into, having multiple production sources as a uranium supply company.
That wins additional points, just like McDonald's production of Big Macs, and where you can go and collect those, and of course the diversity of where you can get those and the different prices, whether you're in the United States or some other country. I hate to simplify it that much, but it really is the basis. The other piece too is, with this, there's that need to maintain and grow market cap, Dustin, and not lose that market cap. And then there's people that have this big market cap and they're saying, crap, I don't deserve this market cap, so how do I keep it? And, that comes back to the M&A question. So anyway, I'll stop there. I've given enough free information there. Well, look, how about just a swap of questions here? Obviously, people are pretty excited about the spot market. Term market seems to be quieter and slower, maybe not behind the scenes. But when do you see that, sentiment about this available inventory will start to change?
When you look at the inventory, I just kind of updated my own little sheet. And if you ignore Russian inventory, you're still around 1 billion pounds. Now, like 450 million is in the hands of utilities, and including the Japanese. That's not mobile. I mean, the utilities tend to, when they adjust inventory on the downside, it's through consumption. We've seen it in the U.S., where the U.S. utilities, starting maybe 3 years ago, started to work down their strategic inventories a bit. The sense was there was plenty of material. But so if you work down through that, obviously the Chinese, I've seen numbers 350 to 400 million pounds, if not more. A lot of it has come from Kazakhstan. They're by far and away the biggest customer out of Kazakhstan. And people have said, well, when the price goes up, they'll start to sell. Well, and I'll make a comment about the recent purchase by Yellowcake of the 2 million pounds from one of the Chinese trading companies. But no, the Chinese actually, as you've probably seen, just did 2-term contracts with Kazatomprom. So they're actually in the accumulation mode still, and it's coming from production. Rossing had a good year last year. What's over 6 million pounds are getting it out of Husab. They are apparently still quietly buying in the spot market, not the biggest volumes that they'd done in the past, but they're still active. And then term, with the contracts with the Kazakhs. Cameco has kind of cautioned the market that don't be surprised if the Chinese come out and extend some of the contracts they did, way back 10 years ago. So I think that's kind of what we're seeing there is the inventory is probably going to become less mobile. Let's put it that way. There've been estimates of at any point in time, there's, 10 to 15 million pounds available, and out of that billion plus. But I think what you'll see is the market starts to tighten. The utilities tend to buy more inventory. You think they'd buy it at the bottom of the price cycle. They tend not to do that. They use particularly the spot market price as a gauge of availability. And so I think as the market price starts to go up, they'll see, they'll be more concerned about future supply availability. So they'll actually start to buy more. So, I think there'll be, let's call it less of that material available into the spot market that might have come from some of the traders always seem to be in and out. They thrive on market price movements, but the utilities, the fuel producers, the converters, the enrichers, the fabricators are sitting on tens of millions of pounds of their own material that they use in the process. So that's not going to be sold into the spot market. So yeah, when you get back on the inventory, the Japanese, that inventory went above 100 million pounds. I've seen estimates it's down to like 85 and on the way down to where some of the utilities are actually beginning to look, as strange as it sounds, in long-term contract. If they in fact are going to be continuing to restart reactors in Japan under the most recent federal national energy plan of 20 to 22% nuclear by 2030, that's 26 to 28 operating reactors. So some of the smaller utilities are actually beginning to look at new long-term purchase agreements. So the chance of that inventory coming back into the market somewhere just doesn't look likely. So anyway, yeah, the inventory side, not to say some of it won't leak, but I think it will be less likely in an environment of an increasing price than even what we may have seen a couple of years ago.
Appreciate that, and good stuff there as far as Japan. Certainly see them getting into the low 20s soon on reactors. I think that's going to happen sooner than later. And with regards to the Chinese for a moment, I wanted to talk about that. With the Chinese state-sponsored organizations out there, we know their in-house production capacity doesn't cut very much into their needs. Dustin, you mentioned Rossing, you mentioned Husab, which we could talk a little bit more about those actually and what their plans are for those two, and how Husab is semi-idled anyway, definitely not at full RPMs, if you will. But what are your thoughts on the Chinese, aside from the Kazatomprom feed as well? What are your thoughts on substantial contracting by the Chinese during this cycle? And do you think that the Chinese will be a term contract leader?
Well, as you're well aware, in November, in fact, this was another factor in the discussions at the Savannah conference. Reuters put out a pretty lengthy article on, it looks like the Chinese are planning on 150 additional reactors over the next, 10 years, 15 years. Anyway, in a fairly short period of time. So when you start looking at what their uranium requirements are, it gets to be like 80 to 90 million pounds a year in the early 2030s, which isn't that far off. So let's say certainly within the next 10-year time frame. So if you're consuming that much, and keep in mind, new reactors require a couple million pounds for the initial core. So their uranium needs are massive from a planning standpoint, even if they don't reach that. People go, well, they'll never get to that point. They have to plan that they will. And so they've had the three-legged stool approach almost from day one, buying in the spot market, signing long-term contracts with reliable suppliers, and investing in production. And I have not seen anything that suggests they're going to move away from that. Now, they'd like more in-house production. First of all, Chinese production is not substantial, and it doesn't look like it will be for the foreseeable future. But, their investments in Africa, Kazakhstan, that's an important part of their uranium procurement. But yeah, term contracts. Now, keep in mind that portfolio, had, and it's been public, Cameco, Orano, I think BHP did contracts with them. But one of the other suppliers was Rio Tinto, which is now gone. And so if you're the Chinese, you have to look out there and say, well, they like to deal with the bigger producers. Not to say if you're a 2 million pound producer, you can't get a Chinese contract. But, they go with the Oranos, the Camecos, the Kazakhstans, the BHPs. As again, Cameco is kind of flagged. Don't be surprised when the Chinese resurface in the term market. And it could be fairly large volumes, which will then be taken off the table and not available to, say, Western utilities. I mean, that's really the message I think Cameco is trying to put out. And I think it's reasonable that the Chinese are not going away. Let's just say their popularity in the West is not what it was a few years ago. And so, that's why I think they're focused more on Africa and, term contracts, maybe more volume out of Canada, maybe some out of Australia. But I think their supply sources are a bit more limited than they were 10 years ago. So again, will they be a leader? You might not see it. That's another thing, is they're not going to put out a public request for proposals. Everything is done off market. So by the time someone announces that there's been big Chinese contracting, the market wouldn't have seen it until then. So again, the thing is, they're kind of a stealth demand. You're not going to see till they've come and gone. So it's just one thing. Again, this is another issue that the Western utilities, particularly in the US, have to take into account, is how much demand pressure will there be on the term market? And it could be substantial. I've been told the Emirates, they need more material. They're not fully contracted, and they've not been in the market, since 2012, I think, almost 10 years. So again, we're going to see a lot of activity out there. And yes, back to your initial question, I think the Chinese will be a pretty big factor in the term market.
Yeah, some of these emerging nations will continue to add to this pressure. The competition between Western utilities and Chinese, Russian-backed demand is going to be substantial. I don't think there's any way to cut around that one. And two, they have the various stages of investment they have. I mean, when you look at, places like Africa, we know that they're involved in places like Namibia, and they're involved in Botswana and pretty much own ACAP resources at that deposit. And then Australia, they have some exposure via ownership of equities, substantial ownership of some equities on development, exploration stage assets. They've got connections in Canada, obviously, as you know. So they've definitely done an interesting job in getting their fingers in just about everything. And they definitely going to need every bit of that stool, Dustin, as you stated there. Here's a different question here, interesting one from the audience. And I quote now, my question is connected to Bob Farrell's 10 rules. Rule number 4 says exponential, rapidly rising or falling markets usually go further than you think, but they do not correct by going sideways. Has the breakout occurred in the uranium market, or is it ahead? End quote.
Well, I think if you go back to the price rise in the early 2000s, when the price got to $136 for a brief period, and then it kind of came back down again to around, let's say, 70 at the time of Fukushima. That's a good example of the overshoot. I think at that point, it just didn't have, it wasn't sustainable. Now, the current price improvement, yeah, we got up to the $50, from around 30, driven a lot by the Sprott purchasing. And then one thing that they did put out at the Savannah conference is how Sprott will operate, where they will buy when it's accretive. There was some assumptions that they'd be in the market every day, no matter what. And that's not true. So you'll see as the market dropped and the NAV versus the trust certificate price got upside down, let's call it that, they stepped back. And I think that's what they've done recently. We've seen them because of the stock market volatility. And so the point being, though, that will then be a driver of the market going forward. UX, that's one of the leading consulting firms in the nuclear fuel area. They made the comment in Savannah that the Sprott Trust will change the market in ways we don't anticipate yet. So I think that on top of buying by Yellowcake, I see the shareholder just approved more purchases for 2022. We have the new trust being put together, or the fund by the Kazakhs. That will be, has been called an accelerant to the market price change. So I think we've not had the true breakout yet, but we're really close to it. I think as we move forward this year, is it, in the next couple of months? Is it by the middle of the year when Sprott hopefully is listed in New York? That'll open up even more capital, although their at the market facility is $3.5 billion. I mean, that's a pretty big number for someone to have the capability in the spot market for purchasing. So yeah, I think we're going to see, as everyone seems to be kind of coming on board with that upward pressure. And I've heard numbers. I'm not, necessarily an advocate of the spot price going over 100 fairly easily. And there are some saying it could go to 200. And people go, oh, no way. Well, it went to 100 and almost 140 back in, 06, 07. I can't remember the exact year. So why not? And we didn't have a Sprott that was coming out buying. I think one day they bought 1.5 million pounds. So that's going to be constant pressure on the spot price. That's when the breakout comes. That's when the term price, won't be 45. It'll have a 5 in front of it and could get with a 6 in front of it fairly quickly. Everybody's going, oh, no, there's plenty of material. No, there isn't. When you start to look at new developments, there really aren't many below $60. And there's another school of thought that says you could get into the 70s, depending on the demand, which we really haven't kind of gone through everything that's happening out there, including SMRs, which, like the WNA report in September, did not take SMR demand into account. Now, the new report out of the WNA will, Trade Tech's presentation in Savannah was on the demand from SMR development. And it's a pretty noticeable increment, certainly as you get out toward 2030 and beyond. So breakout, not quite yet, but I think the factors are really starting to align.
Yeah, the big break's coming, and with cost escalation that's happening, these bigger numbers are certainly in the ballpark, and we'll see where it takes us, but definitely we are going over 100 at some point. There's no doubt about that now, and I think you could just attach cost escalation to it to get to that. A lot of these DFSs and enhanced DFSs and DFS 2.0, BFS 5.0, all these numbers, they literally change in a month. Now you've got to throw these numbers on, and you can see the cost escalations occurring. Look at the copper sector, look at the projects in development in the gold space that are under construction now, and then all of a sudden, we've got on $1 billion cap, we've got a 200 million adjustment just for cost escalation that occurred in the last 6 months.
Yeah.
Get back out the pencil, sharpen up, and get ready to call those suppliers. I mean, you're lucky if suppliers even hold 15 days on their proposals. We've got to adjust. We've got to upward adjust it. You want that manufacturing done, that's going to be 18-month lead time. And that's if you're lucky. if we catch the big break next year or this year, I'm indifferent to that. The more time, the better. And if the broad market's going to bleed us in the short term, also that you have some good opportunity as a result of that, and that should be pointed out. Let's move to Cameco. Should be some good fireworks coming out of there with respect to the upcoming earnings and also likely other surprises that may come about. But what do you think about how they consider their assets now outside of Kazakhstan? And I want to talk specifically more about Kazakhstan in a moment, Dustin, but how do you think they look at their asset base now? With Canada, maybe Australia starts to fit back in as maybe not non-core, but maybe sliding back over to core, and maybe even non-core US assets. Kazakhstan before was very, very important, and still is, but there's a risk to Western companies in that region.
Well, yeah, I think, and we'll talk a little bit about Kazakhstan, I think, in a minute. But, if I'm Cameco, I mean, I can't speak for management there, but with the uncertainties increasing, let's say in Kazakhstan, and you mentioned Australia, the Western Australian government, I think, as you're aware, is now, let's say, pulling licenses or permits because there's not been significant activity. I think VME's the one that went out and started, putting in roads and doing things at Mulgarak to keep their Western Australian licenses and permits. But Yeelirrie, apparently that got pulled, and now Cameco's gone back and said that they're going to, petition the government for an extension, a time extension. So I think, you have to, the situation in Kazakhstan seems to be under control, and we'll talk about that. But you've got to step back and say, well, wait a minute, maybe my Australian assets, if you're Cameco, will have more value going forward. And we'll talk about why that might be the case. Or in the U.S., it's the U.S. involvement is, their, Crow Butte and other production facilities aren't a whole, they don't produce a whole lot. It gets back to my point where you kind of want to have large production. But yeah, would they step back and say, hey, this is worth more now than it was, on December 31st? And is it going to be worth that much more that we hang on to it, or we reprioritize and bring it, kind of not tier one, but tier 1.5? Kind of remains to be seen. We're still early days with all this, but it's certainly not, it's not going to matter. We'll just stick with our strategy we developed years ago on either holding these properties or, offering to sell, whatever. So I think there's a lot of moving parts. Cameco, I'm sure, is looking at it all, which would be the responsible thing for management to do.
Yeah, I think there is a reevaluation that's probably going to occur now. And some of the West Australia projects, the various permits that are there, some are fresher than others. Some are pretty, dingy and hairy at this point as far as, how long they've been out there. Definitely we could talk about those on a different conversation, but interesting to see how this gets reevaluated now that Kazakhstan's dropped down and lost a few points here. And then also you mentioned Rio being non-existent, and certainly they're dormant. You wouldn't certainly count them out yet. As you know, they have some aces in their back pocket, but nonetheless, they're winding down as it would so look with things like Ranger. But Kazakhstan, let's get into that because we've referred to it a few times. What influence do you think Moscow will have on the future uranium production by Kazatomprom, in Kazakhstan? And we've seen news of, liquidation of the state-sponsored fund that owns CAP. What are your thoughts on Moscow influence and, what Kazakhstan is here going forward?
Well, obviously, we could spend half a day talking about the Russian geopolitical strategy. Clearly, the Putin government has wanted to bring Central Asia back closer to Mother Russia. And they've done that through investments, through purchasing. I understand some of the HEU-derived LEU that was shipped to the United States had what's called, carrier feed. In other words, the enrichment has to come, it's attached to the uranium. In other words, the uranium's been enriched. And the carrier feed, it's called, was Kazakh. It wasn't Russian uranium. So they'd been taking it in from Kazakhstan and using it in their process. So, do they have a large say in what goes on there? Kind of yes and no. The Kazakhs, I think, for years said, well, no, we're independent, arm's length. But when there was a call for security forces to come in, they were clearly Russian. They arrived very quickly. Now I understand they're either been withdrawn or most of them have been withdrawn. So yeah, I mean, there's a big Russian, I think, influence still in Kazakhstan. Now, what does that do for, Kazatomprom and uranium production? Kind of remains to be seen. The Kazakh situation, as you know, flared up very quickly. Kazatomprom made it very clear that it didn't really affect their operations because it was mostly confined to the either larger cities or the regions that are away from where production takes place. But, was it a one-time, once-off situation, or will it potentially continue to put pressure on the Kazakhstan government and economy? They want to increase taxes on the mining companies now to provide more money for social programs. Kazatomprom just came out with their fourth quarter operations and trading summary, and they made it very clear that they have supply chain challenges, and it's well field drilling, it's process materials, and that could first of all affect their guidance on production. That's why they have a broader range than they've had in the past. And they've said also the financial metrics of what they're doing. So again, I think they're kind of laying the groundwork, or at least signaling that, yeah, we could have challenges on the production side and we could have cost issues. Everyone's aware that the current group of production facilities were pretty much the low-hanging fruit. And so now as they expand beyond that, they're probably going to see cost implications. But I think it is still early days. And then the other is procurement by the Western utilities. If you're a U.S. utility, you do have to step back and say, I did look at the last 10 years, and Kazakh origins represented about 18% of the volume of purchases by the U.S. utilities. So, it's almost a fifth of their uranium. And they get it not just from Kazatomprom, Uranium One, Cameco, Orano, these other companies that are active in Kazakhstan. But, I think it's been recognized that the utilities value security of supply. And I think they have to look at it. And it may not be the production facilities, it may be transport. This material goes across Russia, out of St. Petersburg. There's a long rail haul, unless you go to China, obviously. And so I think, the bigger utilities certainly have to step back and say, do I continue to commit at the level that I have in the past? Do I cut back on the volumes? Do I buy more strategic inventory in case there is an upset? Like I said, it's still early days. I mean, it's we're not out of January yet. And I think the utilities will take all of that into account. Again, if you're Cameco and, Inkai is a big project, but you say, well, what if there is, nobody's saying stoppage where they go from 58 million pounds to zero, but what if there's an upset in either operations, they still have COVID issues, or in transport. So there's no clear path yet, but this industry is cautious, the consumption side. You cannot have a situation where your units, the operation is affected because you don't have fuel on site, on time. So that is a huge issue. And so I think that's kind of where we are with Kazakhstan. They're produce 40% of the world's uranium, and it has been at relatively low cost. The production facilities are at the lower end of the supply curve. But as you say, labor cost, costs of input, acid. The newer mines of well fields are significant consumers of acid. So will that be affected? So again, it puts that uncertainty into the production side, which then goes into procurement by the utilities. And I think the Kazakhs have done a good job of reliability of supply. They've met all of their delivery commitments that I'm aware of, and they very much value being viewed as a long-term reliable supplier. But do other events start to impact that remains to be seen.
So it's a pretty fluid situation still. And with regards to the Moscow influence, it's going to be interesting to see what happens on the Ukraine side and how, it could be construed in a way that, hey, we have a problem internally in Ukraine and, we're going to ask the Russian government to come in and help us out. It's interesting that you could throw some of the same strategy over on that side of things. And then also that Ukraine, there is impacts there in the uranium market as well. But back to the cost profile, absolutely. I think everything gets more expensive because of the cost escalations we're seeing in most places around this globe. Now, there's some places that have been more isolated than others, which aren't the topic that we need to discuss. But in the past, production in Kazakhstan has been cheap due to the currency credit, labor costs.
Yep.
And a big one that I think not a lot of people have considered is no environmental or ESG overhead. That's a big chunk right there that people sometimes, miss and don't think about. As compared to Western companies, there's so much more overhead on environmental and ESG and regulatory. It's pretty much a free for all over there, especially when it's the government itself that essentially is involved with the production. I don't care how you cut it. There's a lot of waiving of formalities. And then the unrest component, like you said, the logistical part of this. So certainly the costs are going to go up. I think there's a few points taken off on reputation here. And I guess this carries into, we mentioned yellowcake before, but challenges in this region, typically Western companies in this region, in the stands, Mongolia, for example, Turkey, to some extent, these areas are challenged with respect to Western companies. It can be very challenging. We've seen lots of loss of assets in these regions. And so image with the West, that whole thing with Kazatomprom wanting to be, we want to be a tier one source and relationship with the utilities globally. Let me tie this in with that reputation part, Dustin, get your comments there. And then also on yellowcake, do you think Kazatomprom continues to honor their option agreement all the way out to 2027?
Well, first of all, on kind of their reputation, again, it's still too early to say, oh, well, this has really permanently somehow impacted the Kazakhs. It doesn't help. And like I said, I think the utilities will look at it and say, hey, I need to take into account that there is the potential for social unrest, for government, more involvement. Now, I know they want to sell out of the sovereign wealth investment there, but well, who buys in, that remains to be seen. So not going to throw any negative rocks at Kazatomprom. Like I said, I think they've done a really good job of changing the perception by being much more open. Now, of course, they're public, so they have to be. But, say go back 10 years, and it was really difficult to find out anything that was going on in Kazakhstan. So they've been more open. I think they've been, like I said, reliable suppliers to the West. They've not, failed to deliver. The Russians have been delivering into the West since the 70s. And I'm not aware of them ever missing a delivery of nuclear fuel anywhere. So, the Kazakhs were kind of taking that approach, and then you get back to yellowcake. Now, I do not speak for the management of yellowcake, but we've certainly had discussions. And at this point, they see no reason to be concerned that Kazatomprom will not honor that 10-year option, but I think it goes through, as you say, 27. So, I think the company's operating under the assumption that the option will be, if it's exercised by yellowcake, will be honored by Kazatomprom. We have no reason to say it won't. And I think they know the implications. If they don't honor it, then yeah, there's legal protection, but that instantaneously gets into the market. And once you don't make a delivery or you renege on a contractual commitment, that has a massive negative effect on your ability to be a reliable supplier. So I think they will do whatever within their power, within reason, to make sure they meet all of their commitments. Now, will they try to adjust timing? Maybe there's a timing issue or whatever. Could. I mean, it's a long way from the middle of Kazakhstan to, Converdine. But I think in the end, they're fully intending to be a reliable supplier.
Good points. And certainly yellow cake, I mean, given the Sprott comparison, it certainly is inferior to the vehicle at this point, but they do have this option. It's very valuable. And then also, look, as much as they can bring forward and accumulate now, I think it's much better. Let's not speculate on what the price would be in 25, 26, and 27, but certainly the prices are very amenable to accumulation here. Well, let's leave it there, Dustin. Let's wrap up. Covered a lot of area here, and I know you and I could make this podcast much longer here, talking all this good content. But how about your upcoming schedule for the audience members who might want to possibly meet up at a sector conference? Maybe just outline your plans for 2022 and maybe where people could potentially meet up with you to discuss business.
Well, I think, I'm the eternal optimist, as you know, which you have to be if you're in the nuclear uranium area. In-person conferences, there's to be in The Hague, and I think that's in March sometime, is planning it to be in person at this point. The World Nuclear Fuel Market will get together in Montreal. I believe that's in June. At least that's a plan. And then, of course, there's a WNA annual symposium in London, which is in September. And I think there will be, every intent of having that gathering, because if The Hague doesn't happen for quarantine COVID reasons, again, London will be the first chance to get together. And it's been, since 19. So it'll be 3 years. So that's the plan, and the rest of it is still, there's still a lot of Zoom calls going on. Also is the utilities. I am doing work for a couple of producers in the marketing contracting area. The utilities said in our meetings in Savannah, hey, we're not having people come and visit with us, and we'd really like to see that happen. So, am I on that plane to Birmingham, Alabama, and Jackson, Mississippi, and all of that? That could also happen. So, yeah, I think it's just going to be, increased tempo from a in-person standpoint. I just see more of that than less.
Okay, and I think we've got BMO too, I think Florida, if I recall.
Yep.
Well, hopefully some folks can hook up with you and discuss some business topics, et cetera, here. And it's good to see that people are getting back out there, as we need to as well. And the Great Plague has really kind of disrupted a lot of that from different policies where you're coming from. It's just quite a debacle and really becoming a bit silly. Here we are coming into February 2022. So how about for potential clients, consulting to investors and others in the audience, what would you say to them about considering the services of Nuclear Fuel Associates?
Well, I think, hopefully the audience has a feel for my background is in the uranium kind of production. I've worked for a variety of production companies in the past, both big and small. More in the finance area, I am getting calls for, gee, can we have that half an hour discussion about what's going on in China or Kazakhstan or whatever, then just kind of supporting what some of the investment community might be looking at. I think I'm seeing more and more of the groups that haven't been involved in uranium now saying, hey, I need to kind of get up to speed fairly quickly. And the market is not, as you know, is not that straightforward. There's just a lot of nuance and the role of term contracting. It makes the uranium market quite a bit different, that it's not just driven by spot. And a couple of the producers are saying, well, I'm going to go ahead and develop my project and it's low cost and I don't need term contracts. I'm not so sure of that. And so the role of long-term, sustainably priced term contracts really is crucial. And the other thing is, just I'll mention it, is, there's a lot, as you say, a lot of DFS work, a lot of optimization, a lot of, review on the technical, potential operational side. Having a well thought out marketing strategy can be as important or more so on how do you price if you're requested to offer a long-term contract. Do you provide options? That's one thing that's affecting the spot market, is some of the producers gave fairly substantial options that are now being triggered, and that material is coming back into the spot market because the utility doesn't need it, but they're approached by a trader who says, hey, you've got an option of plus 20%. Your contract's at $35. Why don't you trigger that? We'll share the difference between that and selling it, into the spot. So anyway, kind of thinking through diversification. Not all customers are the same. Some are better to work with, easier, more, reason. So anyway, long story short, that's the kind of areas that I, spend quite a bit of my time in.
I appreciate that, and I encourage issuers and other CEOs, et cetera, and even some class of investors to consider the services there that you offer. I think it carries a lot of value with it, Dustin, and appreciate that. And what's the best way for them to contact Nuclear Fuel Associates?
Email. We're on the move both professionally and personally. We spend time in Arizona. We're going back down next week. So sometimes I can be a bit of a moving target.
Dustin, always a pleasure to chat. You stay well, and we'll be talking again soon.
Okay, well, thanks a lot, Andrew, and look forward to it. A lot of moving parts right now. So we'll talk soon.